Good day, fellow investors. UnitedHealth Group is down 55% over the last month, which is crazy, but many of you have commented and liked the comments asking for my opinion. I'll give you a quick opinion here, but the summary is there are 50,000 stocks out there that I can invest in. I need to invest in only those that I know really well. UnitedHealth insurance usually goes to the too hard pile for me, and I also discussed this in a video a few years ago, how banks and insurance stocks are usually that cheap. UnitedHealth was a surprise there because the P ratio was 20-25, because their projected growth, earnings growth, was 13 to 16% forever. That was their target. And now, of course, these targets are a little bit stretched to keep forever, and now there are these surprises, starting from the unfortunate thing that happened to their first CEO, the resigning of the last CEO, the slowing growth, and now investigations into Medicare fraud. I have looked a little bit on Bloomberg what they are saying, and nobody knows yet what will this be. They have had some issues in the past, solved those issues. We'll see about that later. But in short, if you talk about insurance investing, you have to look at this. So this is their growth rate target, and announcing that and having that as a target might lead to the wrong incentives, which are now surfacing a little bit in this Medicare and things like that. So we'll see how that ends up, but they say these are temporary things that if are solved by the end to 2026, then perhaps even the stock might rebound. That is the risk and reward there. However, when it comes to insurance, clearly profits depend on estimated future costs. You get the premium now, and then you estimate the future costs. And here is where the discrepancy comes. And always now look at the incentive first, the 13 to 16% growth. When actuaries start thinking about allocating those costs, estimating growth and profitability, there can be a lot of things that it's very hard to understand. Therefore, always read and listen to Munger's discussions on insurance. I think in one video he said that insurance companies go bankrupt every 30 years on average, and banks every 50 years. That's a given that, of course, people forget, especially after they see this and somebody promises them 13 to 16%, but the things didn't look as good as those are looking now. So there were issues in the past too. You have to investigate and see what's going on. However, you must really know what's going on when it comes to investing in insurance. I don't know. I like my life, so I'm not going to spend years and hours reading through that insurance reports. So it's not for me. All I need is 2 stocks out of the 50,000 or 500 that are not in the too hard pile. So I thank you all for your comments, but as someone said here, it's not really that I can help. However, I can give you another opinion that might lead you to understand the long-term risks there. US life expectancy is around 77 years. Sri Lanka life expectancy is also at that level. If we're looking at how much does the US spend per person on healthcare, on average we are at 14,000. I think Sri Lanka is 2,000 or something like that. Still, I don't think it's just 166, because that would be insane. Nevertheless, it is at least 15% of what the US spends. So there is, as would Shakespeare say, something rotten in the state of Denmark. Heaven will direct it. However, when it comes to healthcare, the US, there are risks there. Yes, it might rebound and then you made some money, but the long-term risks are something to be understood, known, and priced in. The rest is gambling. So I hope you enjoyed my opinion. Unfortunately, I can't help you much, but it is like it is. Tomorrow we'll discuss some other stocks where I can help you that are in my circle of competence.